Welcome back to the Wall Street Podcast.
Hi there. Today we're doing a deep dive looking at analysis and commentary from the Wall Street Journal Weekend Edition. Specifically, the pieces published September 20th and 21st, 2025.
Right. And our focus is really on those key conflicts and, the big moves shaking things up. We're talking interest rate debates, some pretty dramatic immigration changes, and major power plays in finance and tech.
Exactly. Let's start with maybe the biggest disconnect right now. The market versus the Fed. Investors seem convinced the Fed's going to cut rates much, much faster than the Fed itself is hinting.
And those bets are already having an effect, right?
Yeah.
Lowering borrowing costs.
They are. Which is interesting because, the Fed hasn't actually done that much yet, but then you have the whole U.S. debt situation hanging over everything.
Yeah, how does that factor in? I saw the annual interest bill is now, something like $1 out of every $7 the government spends? That's more than defense.
It is, and it fundamentally constrains things. To get real savings, you need rates to stay low for years, not just a quick dip. So the market's optimism, it might be running ahead of that fiscal reality.
So if the Fed sticks to its cautious plan after that last cut?
Well, borrowing costs could snap back pretty quickly, and that would force a very rapid reshuffling in the markets. We even saw some internal disagreement at the Fed. Governor Mirren dissented.
Right. Stephen Mirren, he wanted a bigger cut, a half point.
Yeah, arguing the current policy is too tight, that it's hurting the labor market unnecessarily. So there's tension even within the Fed.
Okay, let's shift gears then. What about executive actions? The administration made some big moves on H-1B visas, a new $100,000 annual fee.
A very steep fee. And alongside that, they rolled out this gold card idea, basically pay $1 million, get U.S. residency.
So that H-1B fee, what's the primary goal there? Is it just about making it harder for tech companies?
Well, the administration frames it as cracking down on companies supposedly using the system to bypass American workers, but there's another angle.
Which is?
The sheer amount of money. Projections are talking hundreds of billions of dollars potentially raised from these fees, earmarked for, tax cuts and debt reduction. It's a massive pricing lever on skilled immigration.
And sticking with government intervention, we saw the administration step in on U.S. Steel, blocking their plan to close an Illinois plant.
Yes, using new authority. That definitely raises eyebrows for investors, doesn't it? The question of corporate autonomy versus state intervention, especially when jobs are on the line.
It does. Now, turning to finance. Big news out of Japan. Sumitomo Mitsui, SMBC, boosting its stake in Jefferies.
Right, up to 20%. And it's more than just buying shares. There's about $2.5 billion in new credit involved, plans for a joint venture in Japan by 2027.
Seems like a strategic play for SMBC to grow globally, maybe get around some domestic rules and target bigger international clients.
That looks like the aim. Okay, let's switch to tech. Hard drive makers. Suddenly seeing huge revenue forecasts. What's driving that seems almost retro.
It's AI. Generative AI specifically. All that text, images, video. It has to be stored somewhere. And the scale is just enormous.
Ah, right. The physical infrastructure needed.
Exactly. Gartner's forecasting global hard drive revenues hitting $24 billion next year.
Right.
That's almost double the 2023 figure, fueled by, $400 billion in big tech AI spending?
Wow. Okay, so connecting this back, what does all this mean for, the average person?
Well, one tangible thing.
Right.
Those market bets on lower rates, they've pushed down Treasury yields, and that's actually lowered mortgage rates a bit recently. So a direct impact there.
And there was also a significant public health development, the main vaccine advisory group, ACIP.
Right, the Advisory Committee on Immunization Practices.
They voted that U.S. adults are no longer generally recommended to get the COVID shot. The new advice is really for adults 65 and older to discuss it individually with their doctor, a shift from broad recommendation to individual decision for most adults.
Interesting. And finally, a bit of innovation touching daily life. Solar cars.
Yeah, companies like Aptera, Telotrucks, their vehicles are getting efficient enough now to add maybe 15 to 40 miles of range just from the sun each day. Sort of a supplemental charge.
In this environment of higher costs, maybe driven by that debt we talked about, even small savings like that could start to look pretty appealing.
Absolutely. And if you pull back, look at the big picture. That theme of borrowing costs, of interest rates, it really connects everything, doesn't it? Mortgages, government debt, corporate deals like SMBC Jefferies, it's the dominant macro story.
It really is.
Yeah.
Which leads to a final thought, perhaps. What does it mean when market sentiment, these forward bets, these massive H-1B fees designed for revenue, when that seems to be driving policy expectations rather than the other way around? That's something for you to consider until our next deep dive.